Hi, everybody. Scott Riley, the Market Update Desk with Scott Riley, NMLS number 157524. Well, we've had a lot of activity in the market Friday, Monday, and today. Want to take a minute and review what's been going on and what it's looking like for the upcoming rest of the week. So last Friday, we had the PCE, personal consumption expenditure, and really the headline and core both came in at expected, which was a little bit of a surprise. We were prepared possibly for a slight upward movement on PCE, but it was good news that it came in at expected. That gave us a pretty flat number on Friday. One thing that we did see within the PCE report that was a little bit of a concern was the prices paid component did increase more than expected. So there's a little bit of undertows of what we're seeing within multiple reports of the prices of things are still continuing to move upwards, and that is a concern specifically for inflation. Now, on a positive note, we're still seeing some lower cost on WTI and Brent crude oil that is helping with potentially the lower oil prices as it rolls into energy and all the things that are affected by that. So we're having so that's going to be potentially positive in future inflation reports. Now, yesterday we got the ISM Manufacturing Index, and that came in at 50.9 versus an expected 49.8. And the ISM Prices Index also came in above expectations of 54.9 versus 52.6. What that means is we're still moving forward with the economy. It's still growing. But the prices component, as you can see, is another data point that's showing increases in prices for goods and services. That is a concern. The other component that came in was the S&P Manufacturing PMI Index. That came in at 51.2 versus 50.1. So we're still seeing some decent positiveness within the marketplace for growth within everything. Now, obviously, what came out over the weekend was tariffs. Mexico, Canada, China. Since the initial announcement over the weekend, we saw the Mexican and Canadian tariffs that were going to be imposed be delayed, but the Chinese tariffs of 10% is now in effect, and there's a retaliatory tariff of 15% on from China to the United States on two or three different specific industries. And they also want to investigate Google, which doesn't play a large role in China because they do have a very controlled internet service there. So we're seeing this negotiation going on between tariffs on what the administration is hoping for with different items and what other countries are hoping to keep that too. One of the things the bond market does not like ever is uncertainty. So even though we have a pause, there is concern because we don't have definitiveness as to will there be any tariffs, how much will they be, and to what targeted industries and countries will they be. So the bond market isn't done being concerned and volatile when it comes to what's happening. And that's a lot of the explanation for what's happening specifically within the 10-year bond market. We saw an initial decrease on Monday on the 10-year. Pre-market was down, I believe it was 7.5 basis points. By the end of the day, it was only down 1. So there's a lot of movement yet to decipher on what's really going to happen. Now, today we had the JOLTS report. This is Jobs Week, or the first week of the month, and the JOLTS is the Job Opening and Labor Turnover Survey. What that showed us is that job openings fell dramatically from an upward revised previous report of 8.156 million to now 7.6 million. The areas that were most affected were professional business and business services, down 225,000 job openings, private education and health services, down 194, healthcare and social assistance positions, down 180,000 job openings. That's pretty dramatic. In fact, it's one of the lower rates since 2013. We look at some deeper numbers within this, and the quit rate remained at 2%. And that's just above the lowest level since 2015. We are also looking at the hiring rate of just over 3.4%. That's close to our lowest levels from 2013 when you take out the COVID years. It's showing us that the job market, which is now actually at a ratio of one unemployed to one job opening, which is down from a dramatic height, which was in 22 during COVID, of 2 job openings per one unemployed individual. The job market is not as strong as what specifically the BLS jobs report shows each and every month, let alone we keep getting these revisions from BLS. It's more indication that it's a softer job market than what is being shown. In fact, the 10-year bond right now is at 4.508. It's down 1 basis point. When we look at the technicals, both the mortgage-backed securities and 10-year bond are in this very tight trading range, being buoyed by 2 different support levels: 25-day moving average, 200-day moving average. In fact, mortgage-backed securities kept hitting the top resistance level the last, throughout 3 of the last 6 trading cycles and bounced off of it, did not go through it. 10-year bond tried to move below its 25-day moving average and did not make it. It bounced back up. In other words, closing above the floor resistance levels. So it's showing us on a technical side, the market does not know where it wants to go. It's looking for more data. Now, tomorrow we get the ADP payroll report, which is, going to be very important to show private payrolls for January. And then Friday, we get the BLS report, which is going to reference from January. Also, we're going to see probably dramatic negative revisions to the December report and November report for the BLS jobs report. So be prepared. We're going to get some volatility the rest of the week. We are on top of things here. We're advising our clients on what the market is doing so that they can make educated decisions on when to lock their interest rate. We've already had a couple of people save dramatic money by helping us show them the technicals and the market forces that are going on so that they're not subject to them. Give us a call. We'll help you get pre-approved. We'll advise you on what's going on in the market so you can be educated. The Market Update Desk, your original singular market news source for West Michigan, 616-290.